I would like to see the earned income tax credit change dramatically upward.
स्टॉक मार्केट रिलेटेड इंटरव्यू वीडियो पाने के लिए मेरे चैनल को सब्सक्राइब करें और बेल आइकन को दबा दें।
Does that suggest Todd is not going to be there for a long time?
I don't think he's going to. No, the plan is not for him to be. I mean, he has not made a permanent career shift. He, I don't know how long he'll be there. We have one important problem, which is which all insurance companies have, but Progressive has done a better job of managing correlating or risk with rate, and that is what we're focused on now.
Correlating risk with rate.
In other words, having the proper rate.
Right, charging the right amount.
Charging the right amount. If you were in the life insurance business and you thought that 80-year-olds had the same life expectancy as 20-year-olds, you'd have a big problem. And what would happen is you'd write all the 80-year-olds and somebody would write all the 20-year-olds. So in auto insurance, the same thing. There's a vast difference.
In auto insurance, I'm not sure. I might prefer the 80-year-olds over the 20-year-olds.
Well, you might, and you certainly would prefer the 80-year-olds to the 16-year-olds. I mean, right. Yeah, and you'd prefer the 16-year-old female to the 16-year-old male. There's a whole bunch of things. So you've got to you really got to segment risks, and that's enormously important. And every company's trying to do it better all the time. We do it far better than we did 50 years ago, but we have room for improvement on that. We're focused on that. And in the meantime, we're growing faster. We're gaining market share. Geico is a fantastic asset. Todd's job is to focus on that, but it's also to work himself out of a job very, very quickly, and preferably to work himself out of a job with somebody from Geico.
Eric LaFont writes a follow-up question. He says, Warren, why did you and Ajit decide to appoint Todd Combs as the CEO of Geico? That part you've answered, yeah. But how will he be able to run Geico, manage a $13 billion investment portfolio, oversee Haven, and be on the board of JP Morgan?
Yeah, well, it'll keep him busy, and we've told him he's unlimited use of a NetJets.
Really?
Oh, sure. No, I mean, we want him to be efficient. That's what NetJets is for, and he, he'll be working 70-hour weeks. The question about the portfolio is interesting. Most months, neither Ted nor Todd makes a single change in their portfolio. I mean, portfolio management is something that you learn over decades. And when I ran Solomon, I was running Berkshire's portfolio. It is not something that you have to sit there day by day and do. People do it that way, but if there are many years where if I just left the portfolio entirely the same and didn't make any changes, we'd be better off. So that's not about. But you're right in terms of JP Morgan's board, and he's going to be a very busy guy. Geico's the top priority, but it isn't going to stay the top priority for a long, long time.
All right, let me run to another question that Max0205 wrote in. Have Todd Combs and Ted Weschler outperformed the S&P 500 since they began working at Berkshire? Why don't you disclose their record?
Why don't
you disclose their record, they said.
Well, we're not disclosing. I think it would be very unusual for a firm to disclose everybody's sales last year among their salespeople or anything like that. I mean, they're entitled to work in relative anonymity. Our directors know how they do. I know how they do. We made a lot of money with them. I feel very good. I feel very good about them in all ways. But we're not going to tell you how much each candy store sells. It's See's Candy, or who was the top person at any place brought in sales, or whatever it may be.
All right, let's jump to Berkshire's overall record versus the S&P. Berkshire has now underperformed the S&P 500 on 1-year, 3-year, 5-year, and 10-year marks.
Yep.
Is that because it's too big, and will it ever be able to outperform the
Well,
S&P?
certainly being too big is part of it. But I would say this. During that same time, I mean, last year, we achieved, now I don't like it, GAAP earnings very well, but we achieved the highest GAAP earnings of any company in the world has ever achieved that's investor-owned. And we have the highest net worth of any company in the world, investor-owned, any company in the world. So I would say related to safety of principal over time, I feel good about it. And I feel good about the fact that 99% of my money's in it, and that it will be the source of all the philanthropic contributions that are made for 15 or dozen years after I die. So, but I do not think it will be in the top 10% of stocks performing over the next 10 years. I don't think it'll be in the top 15% of stocks performing in the next 10 or 15 years. I also don't think it'll be in the bottom 10% or 20% or 30%. So, but our ability to have a huge edge over the market generally with a $550 billion market value, it's just, it'll be minor, but it'll be done in a very, very safe manner.
Is an investment in the S&P 500 a better investment than Berkshire?
It could be. You know, on balance, I think we'll do a little better, but it'll be minor. It depends on the kind of market we're in. If we're in a down market, we're going to beat it. I mean, it's that simple. And sometimes we will be. The last 10 years we haven't been. But over 55 years it's worked, and it will continue working, but it will not work at all like it did when we were working with $100 million or $1 billion. There's no question about that. But we've got good businesses, and we won't be in the bottom quartile, I promise you that, over any long period of time.
There are people, like there were back in 1999, who have said, maybe you've lost your edge. It was a similar thing in 1999 where you saw the technology stocks that were the big high flyers that people were pouring their money into, the dot-com companies and a lot of others associated with that. If you look at the markets again, it's the technology companies that have the big runs. This time you're participating in Apple, which is one of those front runners. But is this a cyclical thing to you? You think there'll be another market downturn and then Berkshire
there'll be a downturn sometime.
And then Berkshire outperforms at that point, or?
Oh, we'll outperform in a down market, but that may not be particularly satisfactory to people. But no, we will, because we have these businesses that are making money, and I mean we're geared somewhat away from a full market participation in either direction. But that's fine. We own, if you think about it, we're 80-some% in equities. We may show 230 or 40 billion in equities, and that looks like we're against our market cap. We're 40%, but we own 100% of these other businesses. Those are equities too. I mean, we own a railroad, and we own insurance companies, and those are equities. So we're about 80% roughly in equities, and about 20% in cash. And I'd rather have that 20% in other good businesses, but that is to some extent a curse of size, and it's to some extent the fact that it's very hard. If interest rates stay at this level, we'll wish we'd, for the next 10 or 20 years, we'll wish we'd been 125% in equities. I mean, you know, equities are so much cheaper than bonds, long bonds, that you know, something will change in a major way. I just don't know what. And I want to be prepared for anything, obviously.
So that's why you keep so much cash around. You want to be able to be prepared for a downturn. You want to be prepared for a crisis. We
want to be prepared for anything, Becky. We want to be prepared for pandemics. We want to be prepared for anything comes along. Yeah, that is the chief job I have. I have people's money that gave it to me 50 or 60 years ago, and some of them still have 100% of their money are essentially in it. And the one thing. And I've got the responsibility for 5 foundations that presently are going to get 80 billion, and I think we'll get a lot more over time, probably. We don't want to permanently lose money, and you don't want to get that so that you go into a shell and don't do anything. But we have obligations to people on workers' compensation claims and auto accidents they've had that go out 50 years, and you know, we have to run the place so that every check clears under any circumstances. And that's why, incidentally, we own treasury bills. We don't own commercial paper. We don't rely on bank lines or anything. When people get terrified, and they will occasionally, everything freezes. I mean, you know, and you're going to have to stand on your own feet at a time like that. It won't happen very often, but it'll happen occasionally.
I know you've developed a thick skin over the years, but does it tick you off when people start questioning whether you've lost it, whether you can still?
Well, I'm sure I've lost some of it. I mean, I can tell you all kinds of things I've lost. No, that happens. But we haven't lost Geico or the railroads we own. Berkshire, without me, is worth essentially the same as Berkshire with me. I mean, my value added is not high, but I don't think I'm subtracting value. But the big thing is how our businesses do and what we get to add in the way of businesses over time. And we can add them through marketable securities. I mean, we own 5.5% or a little over % of Apple. It's probably the best business I know in the world. And we own 5.5% of it. And that is a bigger commitment that we have in anything except insurance and the railroad. So it's our third largest business.
Yeah, it made the point that it was bigger than your biggest acquisition, Precision
Oh,
Cast
sure.
Markets.
No, it's our third largest business.
All right, let me test you on your thick skin.
Okay. Wow.
Here was the kicker of that Barron's cover story. He said, there's reasons to think that the company will be a market beater when he's gone. In the meantime, happy 90th.
Yeah, well, I hope it is a market beater when I'm gone. I'm counting on it. I'm telling my estate and then the trustees that succeed my executors in the estate, I'm telling them to keep every share of Berkshire they have until they have this pattern of giving it away. I mean, I want them to look back and say, gee, we should have made this change earlier, because it's going to determine, how much we buy in the way of vaccines and, and all kinds of things, education, all these things. And I feel terrific about Berkshire after I leave.
I want to talk about another issue that we have not touched on yet, and that's politics here in the United States. We just watched the Nevada caucus. Bernie Sanders walked away with the most delegates after that. He looks to be as the clear frontrunner for the nomination for the Democrats this time around. You have long been a supporter of the Democratic Party. What do you think?
Well, I think I'm going to wait and see who gets the nomination. But I'm a Democrat, but I'm not a card-carrying Democrat. And I've voted for Republicans. I've contributed to Republicans. In fact, I've only run for 2 offices in my life. One was head of the Young Republicans at the University of Pennsylvania, and the other time I was actually on the ballot running for a delegate to the Republican National Convention in 1960. But normally I vote for Democrats, and we will see what happens.
Wow, that's the first time I've ever heard you say something like that.
Well, I've kept it a secret for all these years, but now it comes out.
You just said that you're not a card-carrying Democrat.
That's true.
You are a card-carrying capinconsistent. You
Absolutely.
actually have one of those in your wallet.
Yeah.
I've seen it.
I don't know whether I'm a card-carrying capitalist, right? I don't think that's inconsistent with what I've said on politics. Yeah, here it is. I don't know whether that
For
shows.
those who can't see, I'll show you on this camera right here.
Card-carrying capitalist, and
This is what you carry in your wallet.
yeah, and I think we will have some of those available at the annual meeting too for our shareholders.
I think Andrew's got a question that he wanted to jump in with here. Andrew?
I was just going to follow up on that question, Warren, which was about a year ago. We had asked you about Michael Bloomberg, and you had said that if he ever entered the race, he was somebody you would support. Would you support him? Is he your candidate?
Well, I would certainly vote for him. I don't think another billionaire supporting him would be the best thing to announce. But sure, I would have no trouble voting for Mike Bloomberg.
And what do you think his chances are?
Incidentally, well, I don't think I want to get into handicapping the race, but I would say this in terms of Sanders. I actually agree with him in terms of certain things he would like to accomplish. I don't agree with him in many ways, but in terms of the fact that we ought to do better by the people that get left behind by our capitalist system. I don't think we should kill the capitalist system in the process. I think we should make sure that the golden goose keeps laying more eggs, and it's worked wonderfully since 1776. But it doesn't work as well for people whose talents aren't really geared to a market economy. And I don't think anybody should be left behind by an economy that has over $60,000 of GDP per capita. And so I'm a big fan of increasing the earned income tax credit. And I think there should be some changes made. But if given a choice, I would certainly vote for Mike Bloomberg as opposed to Sanders.
There is a plan. Let's talk about some of Sanders' plans. You said you agree with some of what his intentions are, but let's talk about some of those actual plans. One of those plans would be to give 20% of company stock to employees and put workers on the board. What do you think about that? That would be for any company, public company, that has more than $100 million in annual revenue or a $100 million balance sheet.
Well, I don't want to get involved in evaluating his whole plan, but I think that would be a particularly bad idea.
Because?
Well, I don't think that. I don't think putting 20% of the capitalists on a labor union is a good idea either. And I think the market system works very, very well in terms of developing more goods and services. I mean, when you flew out here to Omaha, if you'd flown out here and you wouldn't have been able to fly in 1776, you wouldn't have seen anything. Everything you see is the product of a system that's worked like nothing's ever worked in the history of the world. So I do not believe in messing up our system of developing output. I do believe that anybody who's willing to work 40 hours a week and has a couple kids should not have to have a second job. And I believe in having a higher income for people, not necessarily a higher minimum wage, but I do not think it's at all unreasonable that the income tax credit produces at least $15 an hour, maybe higher in certain areas. So I'm very much in sympathy with the fact that Senator Sanders believes that a lot of people are getting left behind and through no fault of their own. And there's all kinds of aspects of capitalism that can need, in some ways, to be regulated. But I don't believe in giving up the capitalistic system.
All right, let me slip in some questions that viewers have written in on this front. Michael Blank writes in, please ask Warren if he thinks the market will sell off if it becomes clear that Bernie Sanders will win the Democratic nomination.
I think I normally would never make a comment on something like that, but I would say that if you had Sanders and a Democratic House and Senate, or if you had Trump with a Republican House and Senate, there would be a significant difference. But I don't think I would necessarily vote on what, in fact, I know I wouldn't vote on what I thought necessarily would affect the market the better. I think it's a very poor yardstick. I would not want to cast my vote in a presidential election based on which would be better for the market in the next 30 or 60 or 90 days after the election.
But your reservations with Bernie Sanders, I assume, come with your concerns about what it means for the economy, not over 30, 60, 90 days, over a much broader period of time.
Certain aspects of the economy, certain things I'd like to see done. I would like to see the earned income tax credit change dramatically upward.